June 2025, and uranium stocks are on track for an 11th consecutive green week, their longest winning streak in history. But in reality, this trend is just getting started. Again, if you zoom out big picture, here is my uranium trend long research note as presented to clients in early 2023 on this most durable macro trend long rotation. Before all of this renewed interest in nuclear energy from the AI momentum and data center build-out themes of 2024-2025, I had posted a LaDuc trading client update on my trend-long uranium and nuclear analysis and trades on November 21st, 2023. Everything in this original client post for Club Edge clients remains applicable today and continues to support long thesis in this sector, especially in front of trade wars and the escalation of military wars. I share it here so you can see what, how, why I positioned long these stocks since November 2020 and continue to hold. And since this is a strong sector rotation theme, I have also navigated tactically with clients on news and positioning in stocks that are actively traded in this space. CCJ, URA, URNM, FLR, SMR, OKLO, JBL, GEV, BWXT, CEG, VST, PWR, and more. In light of this renewed interest in nuclear energy and the global uranium supply deficit, I thought it was a good time to revisit the space. Nuclear energy as an energy source has been undervalued for decades due to historical misconceptions tied to catastrophic events like Chernobyl and Fukushima. One, a nuclear facility failure due to mismanagement, the other due to a natural disaster. Tsunami. Neither a reason to disregard the positive benefits from nuclear power when well managed and safeguarded. Even die-hard environmentalists are changing their minds about nuclear power. Let's face it, fossil fuels are not going away, but they are wildly politically polarizing. And while solar and wind energy have been praised, they are not scalable due to unpredictable weather and storage limitations. Nuclear energy is making a resurgence post-EU energy crisis on the invasion of Russia into Ukraine. Now countries are seriously considering using nuclear energy as a safe and viable solution to escalating energy demands, particularly in Asia and Africa. Let's just say nuclear energy is having a rebranding moment, and many uranium traders and macro-themed investors are catching on to the theme that over the next 5 years or so, the nuclear sector will likely prove itself as a sustainable energy source. As a result, Cameco, CCJ, is bringing production back online. At the same time, Kazatomprom has now taken the lead as the world's largest uranium producer, and it's ramping up. In an interview with Adam Rosenzweig, managing partner at Goring & Rosenzweig, he summed up their big bet. I think over the long term, on a sustainable basis, both supply and demand can probably sustain $120 a pound, and that would be enough to bring on supply over time. I think that it's entirely plausible to see uranium at $300 in a spike. Now, that won't be sustainable, but it almost seems likely, you never want to say certain, that you're going to overshoot that $120. From a demand perspective, utilities are captive buyers that need to get their hands on the fuel. The International Energy Agency estimates that global nuclear capacity needs to double by mid-century from 2020 levels to help the world meet net zero commitments. As a result, the US and the UK have pledged to triple nuclear power by 2050 at the COP28 conference. As such, uranium demand is projected to outstrip supply until 2028. With only 74% of demand being met in 2022, this is expected to result in a cumulative gap of 100,000 tons over the last decade. And given the secondary supply, which previously acted as a buffer, has dwindled to cover only about 60% of the current gap, this leads to concerns about uranium availability. Anticipated global population growth, primarily in Asia and Africa, underlines the urgency for meeting expanding energy needs. India has recently surpassed China as the most populous country, emphasizing the need for swift energy solutions. China and India are committed to nuclear energy development, with many new power plants set to join the grid in the next 2 years. A global nuclear renaissance is taking shape, with numerous countries like Canada, Sweden, Japan, India, France, the UK, and Russia planning significant nuclear energy expansion, resulting in a surge in nuclear reactor construction, the highest since 1992. France has committed to constructing 14 new nuclear power plants, plants, and South Korea is also contemplating building new ones. But Arthur Hyde, a portfolio manager at LaDuc Capital, said, "For the supply and demand of this market to balance, we need new assets to come online. If you're going to insulate the US, Europe, and Canada from the global fuel cycle, which is heavily dependent on Russia and China, the best way to do that is to build new mines, new conversion capacity, and new enrichment capacity." Unlike some commodities, opening new uranium mines is a lengthy and capital-intensive process, often taking a decade or more to become operational. It's not a quick solution to address this shortage of uranium and have miners boost production. Countries must invest and plan ahead, as significant increases are not expected until 2025. It may come as a surprise, but nuclear energy waste has distinct advantages over waste from other energy sources. Misconceptions about the hazardous nature and longevity of nuclear waste persists. But truth is, it is compact and traceable. Storage solutions for nuclear waste include on-site pools, dry cask storage, deep geological repositories, recycling, and transmutation. In contrast, fossil fuel energy has harmful side effects and incomplete waste regulation. Regarding carbon footprints, nuclear is one of the cleanest and most efficient ways to create energy. With over 90% of its energy remaining even after 5 years in a reactor, spent nuclear fuel can be recycled to make new fuel and byproducts. While the United States does not currently recycle spent nuclear fuel, other countries like France do. Additionally, advanced reactor designs are in development that could potentially consume or run on spent nuclear fuel in the future, offering a promising solution for recycling and utilizing this valuable resource. It's ironic how uranium has caught the attention of hedge funds now that uranium prices have already soared 125% since the end of 2020, when I literally recommended long. Hedge funds and DIY investors are mainly focused on uranium miners. As such, that is why I added CCJ, URA, and URNM as proxies to play the long uranium theme. Long-term macro trends support long-term investment themes. Nuclear is not going away as a viable and sustainable source of cost-effective and safe energy. It will have obstacles to scale, and there can be setbacks of size. But overall, the supply deficit that is uranium against the backdrop of growing global energy needs helps to support this bull case for uranium and uranium investments for the long haul. Just keep these risks in mind. Hybrid solutions, small modular reactors, SMRs, are advanced nuclear reactors that have a power capacity of up to 300 megawatt electrical per unit, which is about 1/3 of the generating capacity of traditional nuclear power reactors. Given these are not expected to really roll out until the 2030s, it is too early to tell their impact on uranium demand. Infrastructure and supply chain risks. Uranium mining and supply chain infrastructure may face challenges, including aging facilities and limited processing capabilities. The entire nuclear fuel cycle also can take years, and supply chains can span across multiple countries where geopolitical disruptions can impact prices and availability. Public perception. Negative public perception of nuclear energy can influence investment decisions, as it may deter funding and support from governments and investors. For example, Germany wound down its nuclear program in 2011 in reaction to public outcry over Fukushima. They have since pivoted back to nuclear, but only after the crisis caused by the Russian-Ukraine war. Environmental and regulatory risks. Environmental concerns and stricter regulations regarding nuclear energy and uranium mining can affect the industry. Changes in environmental policies or regulations can impact production costs and profitability. These are the unknown unknowns the industry still faces. Let's jump ahead to February 7th, 2024, where client Richard updates us on his uranium thoughts. The space is on fire and has a long way to go. When I looked at it 4 years ago, 5 years ago, I had never seen a setup like this in my career, and it's actually better today in terms of supply and demand than it was then. Richard has worn many hats, including broker, specializing in precious metals. He's been in the industry a long time, so he speaks from experience when he sized up the uranium trade in late summer of 2020 for LaDuc trading members. It was completely orphaned like gold in 1998-2000 at $275 per ounce. I had seen the movie before and made out large on that gold run from 2000 to 2011. But this industry is far, far more complex in every aspect. And the beauty is that there can be no real supply response in the short to intermediate term because it takes so long to get new mines in production, all the while when the existing operating mines are being depleted. So, as we fast forward to June 2025, Cameco has doubled in 2 months on AI infrastructure build-out excitement, but it is up 7 times since I added it as a trend-long position for clients. And that's why uranium and nuclear remain a durable investment theme. Join us at LaDucTrading.com for more actionable trade setups across all asset classes and timeframes and to access our live portfolios.